So you're an investing champ, huh? You want to get some mortgage help with that? Well, DSCR, Debt Service Covered Ratio. Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and OMA Realty. If you need any help with any of these loans or any loan product out there, link in the description below. I'll be more than happy to help you out. But let's go ahead and talk about what's called a debt service covered ratio. Now, a lot of people that use the BRRRR method, they go ahead and fall under this category because you're an investor. You know, you're doing your thing, you're killing it, you're trying to accumulate more and more units, but you're solely based off of the rental income, right? The rental income is what you're trying to get after. So we're gonna simplify it as best as we can, okay? Because this doesn't require your taxes. This doesn't require your your W-2s. This doesn't require. We're purely based off of, is the debt gonna be serviced on this mortgage? So whenever you're looking at a property, it's super simple, okay? Very simple. I'm gonna go ahead and put this in crude layman's terms. Wait a minute, this crude layman's term means that it's like you curse? Whatever, it's in layman's terms, okay? So it just means that A, is my principal, taxes, and insurance going to be more or less than what I am totally gonna collect on rent? Okay, so like let's say for instance, just for the sake of argument, you have a mortgage payment, principal, interest, taxes, insurance at $2,000 a month, right? $2,000 a month, and then your total debt coverage, right? Your total debt coverage is at $2,000. So you're bringing in $2,000 and you are gonna go ahead and pay $2,000. That is a one covered ratio, right? That means we're even money, and that's just the way they are. By all means, please don't do that, okay? Don't go around that route. Don't try to get all crazy with it. Try to keep yourself at least bare minimum at the 1.25 and above. You can go down, of course we can go down to 0.75, which is stupid, don't do it. But there's a little caveat to that. It's not always that stupid. Like let's say for instance you did a DSCR loan and you got in at 0.75 back in, I don't know, let's say 2019, right? 2019, and then now we're in 2022 because of how high the rentals have gone and how much appreciation you have. You could always refinance that property, pull out cash on it, do whatever your little heart desires, and you would go ahead and go from there. But this is how we calculate what you are actually going to do. So whenever we're calculating on a DSCR loan, first we're gonna go ahead and take a look and do a market evaluation, a market analysis. So when we do the appraisal is gonna go ahead and come in. The appraisal, they do something that's called now when we do this market analysis, okay, it happens with the appraisal, okay? So what they do is they look at the market rents in that area. That market rents is gonna be filed, and it's gonna show up on the appraisal report, and it's gonna come in on a form that's called the 1007. The 1007 is just gonna say, hey, you know what? We did an analysis on this. This is how much the market rents are going in the area. This is gonna be your debt service. This is where we're at. So if we say, you know, our debt service is even money and it actually comes below, then we're in kind of a tricky spot. We still have to cover that extra amount of that we're asking for. But if we're above it, we're in the clear. So if we did even money and we come in at like 1.25 or even 1.5, then we're golden. We don't even have to worry about anything. And this way you could go ahead and start getting into the property. Now these do require about 20% down. This is only because you are relying solely on rents, because you are an investor. You are the person that's just building up units. You don't have, like, let's say your 9 to 5. You don't have any other source of income. You are just buying properties and you're using that debt to go ahead and pay, or that servicing to pay for that debt. That's all you're doing, right? You just keep going, and because you're accumulating units. That's the name of the game. We got you BRRRR method, guys. BRRR, buy, rent, or buy, repair, rent, and refinance. That's what you're doing. But you want to initially get into it. We want to see what the rentals are going in. Maybe it's not going to be a repair. Maybe it's just going to be a BRR. It's going to be buy, rent, and refinance. You could do that too, or it could just be a buy and rent. Now, do you honestly go with the DSCR loan all the time? No, you don't always go with the DSCR loan. Sometimes you go into other loans. We have bank statement loans that you could go ahead and go into. This qualifies you. Easiest way to go ahead and do this is if you're collecting rents, right? If you're collecting rents and you're not showing it, right? You're not showing it on like anything. We look at your bank statements and then we go ahead and say, okay, you have X amount of dollars coming in because you have people paying you rent. You have people like, constantly paying you rent. Let's say you have like 10 units, right? 10 units. We go ahead and do your total taxes and I apologize. I'm going to correct myself right now. I have this other loan in my head right now and I apologize, but your bank statement just shows how much money you got going out versus how much money you got coming in. That's all it is. Very, very simple. Not trying to get all technical with it, but to stick to the DSCR loan, it's purely off of rental income. So once we get that appraisal in and once we see that 1007, then we could go ahead and keep going into what's called, we could get you pre-approved on this on this rental property. Now, as far as the requirements goes on this, like I said before, we only rely on the rents to go ahead and qualify you. But do you need a good credit score? Yeah, you're gonna need. The better the credit score, you're always going to be in like a better situation than you are if you don't go into like, if you have like a 640, you're going to kind of get hit. Okay. Don't anticipate that it's going to be like something extravagant. Now, everybody's going to ask, but like, okay, so what is this compared to like a regular run-of-the-mill conventional loan? Now, there is a bit of a difference. There's going to be roughly maybe like 100 basis points or more, which in the grand scheme of things, if you are an investor, right? If you are an investor, it's not really that much because you're trying to build your portfolio as much as you possibly can to go ahead and just keep doing what you're doing. Keep like, building and building and building and building. That's what the name of the game is. So as far as credit goes, I prefer that you stay above 700s. 700s would be, ideal situation. And how much time do you need as far as like, how much money you have in your bank account? Now, on a conforming loan, you need at least, a couple of months bank statements, depending on where we're at. Sometimes there's something that's called seasoning your funds. Okay. Seasoning your funds means how much time does that money that you have sit in your bank account versus how long that, until we could go ahead and use it. Sometimes you don't need any, okay? You don't need to have anything seasoned. Now this is only, and I'm going on conforming, okay? On the conforming side, you could get something that's called a gift fund, and that is somebody giving you money to go ahead and help you purchase your property. Now on the DSCR, let's say if you are out there and you're just killing it and you got Pablito or Tabito or whoever it is that you got that's giving you a bunch of cash, we only need to show that in your bank statement for, think like you could go like, the lowest we could go like 10 days. 10 days is not a long time. So if you just deposit it, by the time we close escrow, you could literally deposit that money at the beginning of the loan product or getting into contract, and then that'll be good to go by the time we close. Look at that. So if you have like a bunch of people that are there, now this is what's called syndication, right? If you and like a bunch of buddies or you got a bunch of business partners and you guys are gonna go ahead and put money into whatever type of account that you have, right? It doesn't matter what kind of account, or you're like one of those Bitcoin guys or those Ethereum or whatever it is, and you just made a bunch of money. Like that one guy who told us back in 2013 that, you should buy Bitcoin, which, side note, here's a stupid story. I actually bought Bitcoin back in 2000 and I think it was like 2010. Now, one of my buddies was like, hey, listen, you need to buy this Bitcoin thing. I was like, what the hell is this Bitcoin thing? I'm not going to buy any of this Bitcoin thing. He's like, yeah, it's a cryptocurrency. You should buy it. He's like, yeah, it was like pennies on the dollar. It was like, I think it was like in the cents at that time. He's like, well, what are you going to do? Go put like $100 in it. And I'm like, all right. So I put $100 in it. When I bought it, it was like put the code and everything. I had on a USB drive, and then I had another USB drive that I put because it gives you like these names and these codes that you have to as your password, right? So it's like 10 or 12 different phrases or words that you have to go ahead and put in. And I think I bought like $500 or $600 worth, and each Bitcoin was under $1. I lost them. Lost them all. Damn. Whatever. Can't cry over spilled milk. Well, anyways. So if you have money that's coming in from other areas, from other places, or whatever it is, the seasoning for it is very, very short. It's only like 10 days. It's not that big of a deal. It's not like your conforming side. And then you could go ahead and keep going. So buying you that the bare minimum on the credit score, I personally prefer that you stay into the 700 ranges, just so you don't get hit at a higher percentage rate, because it is going to be between 5-7%, which is very, very high, especially for now. Back in the day, it wasn't that bad, or back in the day, I mean, like, you know, in the past couple of years, it wasn't that bad, because, you know, it's still a really good loan. It's still, but the risk is really, really high, because you're relying on rent. Now that, you know, this whole, like, what is it, the eviction moratorium's over, now everybody could kind of breathe easy, and you could kind of get into these loans and still be a little bit more comfortable. These did kind of ruin some investors, because this has never happened before, this eviction moratorium debacle that they have going on, which I don't understand what they're doing. I don't understand, whatever. It's a sore subject for me. It's a very, very sore subject. Now, to keep going on with the Dscr loan. So first, what we have is you're going to go ahead and see what your covered ratio is, right? Your covered ratio, 1-to-1, hypothetically, let's say you have like a couple of $1,000 principal, interest, tax, insurance. You want to go ahead and at least stay even money on that, which will be a 1 covered ratio. Then credit score, you want to go ahead and make sure that it is at least above 700, preferably. You could go down to mid 6s if you want. I don't suggest it. Your world, squirrel. I'm just trying to give you the information. Then what we have is you're gonna your down payment, it only has to be seasoned for 10 days. Then the last piece of the puzzle is going to be, well, how much money do you need, excluding your down payment that you have. Now, excluding the down payment that you have, you're gonna need at least another 6 months worth of reserves just sitting in your account, and whatever type of account that you might have, whether you could use your, like, let's stick to the crypto accounts. You could use your crypto account. You could use in any type of investment account. You have a savings, which savings is so stupid. Don't use savings. Savings is ridiculous. Just find an investor that'll go ahead and help you out. Take loans out on your investment account, because then whatever. Make your money work for you. I'll make another video on that, but your total reserves that you need to have is going to be 6 months. Now, this is based off of having something over 700 credit score, right? If you have over 700 credit score, you have 20% down, all that kit and caboodle, everything is all good to go. They're going to require more the less credit that you have down, like if the lower your credit is. So you see how this kind of just like it just starts tumbling down a really, really bad way. So we want to be in the best position that we can. If you want to go ahead and get some help on getting your credit repair, I'm sure you could Google credit repair people. If you want my personal way of doing things, you could go ahead. I'll put the link somewhere above here. You could look at that. But yeah, you rental investor guys, like myself included, this is how we get some of our funds when we don't have any other income except our rental income, which I do, but these are my companies. But for up to 50% commission rebate on your next home purchase or any lending that you need assistance with, link in the description below. Let me help you out. Make yourself a mortgage broker friend. We're pretty cool people. We're kind of degenerates, but we're cool. Until next video, if you like the content, please think about hitting the like, subscribe, and comment, and all that other good stuff. And what else was I going to say? And that's pretty much it. If you have anything else you want me to talk about, please comment below. Let me know. If you hated it, please let me know that you hated it. I'm just trying to do the best I can do here, young ladies and gentlemen, or whatever you want to be called. Till next video, all disclaimers are below. This is not a promise to lend. This is not solicited for informational purposes only. NMLS ID number, blah, 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 blah. These are all the disclaimers that I have no choice but to say. But I appreciate you guys watching. Thank you. Next video. Peace.